Hey, welcome aboard. It's Walter here. Do you know the market type that you're in when you're trading? And the reason why I think it's useful to look at this is because there are certain strategies that are going to apply based on what the market's doing. I'll share a couple of common ones with you right here. So let's get into it. All right. Into the matrix we go. All right. So this is the USD Swissy, and you are looking at the 4-hour chart. Now, there are a couple of different market types I want to kind of share with you. One is the sort of the traditional sort of trending, looking really good, things are looking excellent. And by the way, before I forget, if you want to join us in building up a very small account, $1,000 account quickly, you can click the link above or below to get more information about that course, the Small Accounts, Big Profits course. You should see that link below or above this video somewhere. All right, so this is the old Darvis box trend, actually. If you've read the book by Nicholas Darvis, you know what I'm talking about. It's a pretty cool book. I like it because it highlights a couple of things. Number one, you don't need to sit around and just watch the charts all day long to make money. You can actually just place your trade, go dancing, literally dancing around the world and make money. Yeah, I mean, it really doesn't take that much time once you've built up your confidence. And Nicholas Darvis wrote a book called How I Made $2 Million in the Stock Market, which today would have been like 30 million, because that was back in the 40s or 50s, I think. But this is what I would call a Darvis box market. And the reason why is because the market makes a really strong move upward, and then it boxes up and then makes another move upward. This one actually retraced. You might not consider this a strong trend until it takes out this high. That would be a pretty fair spot to see this, especially the way it kind of touched it right here, and you might be concerned about some support and resistance coming in, given the floor over here, the floor right here, and then the high right there. So I could see where you might not want that. You know, you might not see it as a trend, but certainly once this happened and then you get that box, that's a great Darvis box, and you can just put a buy stop above this box here. We'll be trading these trades in the Small Accounts, Big Profits course. Here's another one right here. Again, it just kind of boxes up here, goes flatline. Notice how it doesn't go against the trend. It just flatlines and then jumps up again. You know you're in a retracement, by the way, when the candles get very wicky. That's a great sign that that's what's happening there. Now, this is a little bit tricky because it kind of double topped here and then fell down. So now you're thinking, oh, maybe the trend's over. But no, you get another explosion here. It boxes up, and guess what? We're going to go again like that. So that's kind of what a Darvis, the structure does break down a bit here, but that's basically what a Darvis box market looks like. You don't have the typical, like in a typical uptrend. Let's see if I can find one here for you. Here's another Darvis box market. Actually, this one's a lot better. But in a typical uptrend, what you'll see are bearish flags that go against the uptrend, kind of like what you're looking at right here. This is a bearish flag down. This is a bearish flag down. Usually it goes down against the market, just like it goes up during a downtrend. So let me show you another market. So one is the Darvis box, which lends itself to breakout entries and obviously trend trading. Another market that I really despise trading is the highly volatile trending market. So you can see here, the market topped out up here, kind of made like 3 touches up here in right around this, whatever it is, $1 even, right around the critical psychological value there, came down and then made this really violent moves against, even though it was making lower highs here, it's made some really strong moves against the trend. It was really going down. It made these lower lows, lower highs, and went all the way down to here. But it was a wild ride. And when I see those styles of markets, really you need to probably draw a channel and trade off the edges of the channel, if at all. So those are typically a little bit more difficult, at least for me to trade. And then there is one of my favorites, which is called the parabolic trend. Now, I'm not saying that we are in one now because, as you'll see in a minute, and again, you want to get on the small account Big Profits course, we will trade parabolic trends. We will trade Darvis boxes, all those. You'll see my first 300 trades as I build up the account. But this is really more about defining whether a trend has gone really too far, too fast. And if that's the case, the rule that I use here is that we have multiple trend lines. Usually you have 3 to 5 trend lines. So 3 to 5 trend lines that capture the market movement. Now in this case, we actually only have 2. So this is the USD Swissy right now as I'm recording this. And I have one trend line that captured this move. You can see it's starting to accelerate and go higher. I still think this is a great trend to trade at the moment. But if we get another trend line that is even crazier than this, then I would start to think, maybe something's going on here. And what this would look like would be, I'll share this with you. It would look like something like this. The market started to accelerate even more. And I had to take a third one or even a fourth one sometimes. You'll squeeze a fourth one in. Usually it's 3 or 4. Sometimes you'll get 5. But basically what this means is if it's following this third trend line or something similar, it's time to look for an exit. It's time to short it and go the other way. It's a really good sign. And those are great. They lend themselves to trailing exits are great for capturing profits from those styles, that style of end of trend. It also happens to be one of the most popular ways to trade. Most traders, when they see a trend, they're looking for the end of the trend. And you can see this in the open position ratios. Just Google open position ratios and your favorite currency pair, and you'll find that. IG Markets, Awanda, Saxo Bank, lots of brokers will offer that data for you. And so what you'll notice like for example, right now in the Swissy, there are a lot of traders who are going really hard long, let's see here, or shorting the USD Swissy. Where is the USD Swissy? Here it is. So the USD Swissy, as you can see right here, is 21% of the market of the traders are going long, and 79% of them are going short. Okay, let me share this with you so you can see. 79% of the traders are going long or short the USD Swissy. Remember which chart I showed you? This one? Most traders are selling short. So they think that this is the end of the trend. It's gone too far, too fast. I would be inclined to go long, and I would do that until I saw a really strong parabolic uptrend, and really the number should kind of fizzle out and pull back away lower than 70% short. And then I would be looking for a reason to sell and take out that. And what's great about the parabolic uptrends is the market moves very quickly, very, very quickly. So it's pretty awesome stuff when it happens. Anyway, I hope this helps. I hope that this helps you kind of see the market structure in different ways, see if it's a volatile trend, like that really wild trend that I showed you, or the more Darvis box style of trend, which is super easy to trade. At least I find it easy to trade. And the parabolic trends, which are great if you like to try and pick the end of a trend. But I would pay attention to the open position ratios there. I found that to be very useful. So we'll talk about all this stuff in small account, big profits. If you'd like to join, you can click the link below or above. Otherwise, I'll see you in the next video. See ya. Bye.